Imagine a single company with the power to influence global economies, shape markets, and impact the lives of millions. This is not the plot of a dystopian novel, but the reality of BlackRock, one of the most powerful and influential financial institutions in the world. But how did a company, starting with modest beginnings, come to hold such immense power? This is the story of BlackRock, a company that quietly became a global financial giant, influencing everything from corporate boardrooms to government policies. BlackRock was founded in 1988 by Larry Fink, along with a group of partners, including Robert Capito, Susan Wagner, and Ralph Schlossstein. Initially, the company was part of the Blackstone Group, a private equity firm. Larry Fink, who had a background in mortgage-backed securities, envisioned a company that would specialize in risk management and fixed income asset management. His idea was to create a firm that could provide financial services with an emphasis on understanding and managing risk, something that was not as commonly prioritized in the late 1980s. The company started with a humble $5 million in seed capital. Fink and his team quickly set to work, leveraging their expertise in financial markets to attract clients. By focusing on risk management, BlackRock was able to carve out a niche in the crowded financial services industry. Their approach resonated with investors, especially after the 1987 stock market crash, which highlighted the importance of risk management in preserving wealth. In the early 1990s, BlackRock separated from the Blackstone Group and became an independent company. This move allowed Fink and his partners to fully control the direction of BlackRock, shaping it into a leading asset management firm. They rebranded as BlackRock in 1992, and from there, the company began its rapid ascent in the world of finance. During this period, BlackRock expanded its services beyond fixed income and risk management. The company started to offer a broader range of investment products, including equities and alternative investments. This diversification helped BlackRock attract more clients and grow its assets under management AUM. By the mid-1990s, BlackRock had established itself as a significant player in the asset management industry, known for its disciplined investment approach and innovative financial products. A pivotal moment in BlackRock's history came in 2006 when it acquired Merrill Lynch Investment Managers, MLIM, in a deal worth $9.5 billion. This acquisition doubled BlackRock's assets under management, making it one of the largest asset managers in the world. The deal also expanded BlackRock's global reach, giving it a strong presence in Europe, Asia, and the Middle East. The acquisition of MLIM was a game-changer for BlackRock. It not only increased the company's scale, but also enhanced its product offerings, particularly in the equity space. This move allowed BlackRock to compete directly with the largest asset managers in the world and laid the foundation for its future growth. The integration of MLIM into BlackRock was smooth, thanks in large part to the leadership of Larry Fink, who emphasized a strong corporate culture and a focus on client outcomes. The 2008 financial crisis was a turning point for many financial institutions, and BlackRock was no exception. However, unlike many of its competitors, BlackRock emerged from the crisis stronger than ever. One of the key factors behind BlackRock's success during this period was its proprietary risk management system, Aladdin asset, liability, debt, and derivative investment network. Aladdin was developed in-house by BlackRock and became a critical tool for managing risk across its portfolios. During the financial crisis, Aladdin's ability to provide real-time data and risk analytics proved invaluable. It allowed BlackRock to navigate the tumultuous markets with precision, protecting its clients' assets while many others struggled. As a result, BlackRock gained a reputation for being a safe pair of hands in uncertain times, which attracted even more clients to the firm. In the aftermath of the crisis, BlackRock's role in the financial system grew even larger. The US government and the Federal Reserve turned to BlackRock to help manage the troubled assets of several major financial institutions. This involvement not only solidified BlackRock's standing as a trusted advisor, but also expanded its influence in global financial markets. By the 2010s, BlackRock had firmly established itself as the world's largest asset manager. The company's assets under management surpassed $3 trillion in 2010 and continued to grow rapidly. One of the key drivers of this growth was BlackRock's dominance in the exchange-traded fund ETF market, particularly through its iShares brand. iShares, which BlackRock acquired from Barclays Global Investors in 2009, became the crown jewel of BlackRock's product lineup. ETFs revolutionized the way investors could access markets, offering low-cost, diversified exposure to a wide range of asset classes. BlackRock's early entry and aggressive expansion in the ETF market helped it capture a significant share of this rapidly growing segment. As BlackRock's influence expanded, so did its responsibilities. The company began to play a more active role in corporate governance, using its voting power to influence the practices of the companies in which it invested. Larry Fink's annual letters to CEOs became a highly anticipated event, where he would outline BlackRock's expectations on issues such as climate change, diversity, and long-term value creation. This activism, while sometimes controversial, further cemented BlackRock's role as a steward of global capital. With great power comes great scrutiny, and BlackRock has not been immune to controversy. Critics have raised concerns about the company's size and influence, arguing that it wields too much power over global markets and governments. Some have also questioned BlackRock's commitment to the social and environmental causes it advocates, accusing the company of being more concerned with public relations than with meaningful change. Additionally, BlackRock's involvement in managing government bailouts and its close ties to central banks have led to accusations of conflicts of interest. The company's role in managing the Federal Reserve's bond buying programs during the COVID-19 pandemic, for example, sparked debates about the appropriate level of private sector involvement in public policy. Despite these criticisms, BlackRock has continued to grow and adapt. The company has made efforts to address concerns about its size and influence by increasing transparency and engaging with stakeholders on key issues. Larry Fink has also continued to push for greater corporate responsibility, urging companies to focus on long-term sustainability rather than short-term profits. BlackRock's journey from a small startup to the world's largest asset manager is a story of vision, innovation, and strategic growth. Larry Fink's leadership, combined with the company's commitment to risk management and client outcomes, has propelled BlackRock to the pinnacle of the financial world. Today, BlackRock manages over $9 trillion in assets, making it one of the most powerful institutions on the planet. But with this power comes responsibility, and BlackRock's influence over global markets, corporations and governments will continue to be a subject of debate. As the company navigates the challenges of the 21st century, from climate change to economic inequality, its actions will undoubtedly shape the future of finance and the global economy.